Hello to all traders once again. This is Stavros Tousios for FXPRIMUS, the market specialist, and today in this short video we will look at the RSI indicator. Okay, so the RSI indicator measures how bullish is bullishness and how bearish is bearishness. Okay, and its main purpose is to identify extreme behavior with an even balance between bulls and bears, okay, or else called the overbought and oversold levels. Okay, the RSI is a lagging indicator, okay, so which means it measures current and historical strength of or weakness of the price. However, it's proven to come close to marking two instances of buyer and seller excess than any other indicator. It's a derivative of the momentum indicator, so it mimics price action by computing momentum as a ratio of higher and lower closing prices. Okay, typically traders use the RSI in ranging markets. Okay, as in ranging markets, the price tends to stop at overbought or oversold levels and reverse. Okay, for example here. Whereas in the trending or breakout markets, those levels are broken. Okay, so here we have a breakout. Here we have a breakout just for a very short period of time. So some combine the RSI or two RSIs together of different periods to get a crossover signal. Okay, if we add another RSI here, the period of 9, and let's change the color to green. We also can use this as a crossover signal. Okay, so you could generate signals from using RSIs for different periods. Some others also use trend lines on the actual RSI. Okay, for example, this here is a trend line. Okay, and here also this is a trend line. And what we can notice is that the price is actually crossing over this trend line here much earlier than this trend line is actually broken. Okay, so there is also another way to use the RSI, and this is to identify divergence. Okay, so for example, let's take one of those off. Let's take the 9 period away. Let's move this away and have a look here at what a divergence is and how we can use the RSI for this. Okay, so divergence basically is when the price is moving higher and the indicator is moving lower. Okay, this can be a change of the RSI, MACD, momentum, the commodity price index, but let's just focus on the RSI today. This is one other way of using the RSI indicator. So you would expect, for example, on an uptrend to see a higher high on the price and a lower high on the RSI. Okay, and this could sometimes be a good indication that there might be a change in the trend. Okay, but obviously this is not valid when you look only at one indicator. Okay, the more tools you use and the more confluence there is between those, the more chances that this could be a good signal. Okay, now most of the majority of traders are using the 70-30 overbought oversold levels on a 14 period. Okay, however, to me that should be more relative to the time frame one uses for his strategy. Okay, and not purely on what the majority of traders do. For example, if you trade on the 5-minute chart, Okay, this is a very short period of time. So if you don't want to get many signals that could be misleading, okay, the best thing to do is, if you're on a short time frame, just go with increasing your overbought and oversold levels. It really depends what period you use as well. Okay, so if you're using an 2080 overbought oversold level and 14 period, if you change the period down to 9, obviously you will receive signals more often. Okay, for example, you get another one here right now. Okay, so have that in mind when you play around with the periods and the overbought and oversold levels, because obviously adjusting one should not always be necessarily to adjust the other.